Question number 5. Polly, a SEMA member in practice, has been asked to complete an important task. However, she is very pushed for time and knows she will not be able to complete it properly. Which ethical principle is under threat? So, this is about a person. Please participate in the discussion. Polly is a member, SEMA member, and has been asked to complete an important task. So the work is assigned to her. However, she is very pushed for time and knows she will not be able to complete it properly. So is it about integrity, confidentiality, professional competence and due care, professional behavior, or objectivity? So which point is a related one here? So um, she will not be, she knows that she will not be able to finish that in time. So that's the point here what is highlighted.
Professional behavior, ma'am.
See, she knows that she will not be able to complete it properly, so which means that there are certain set of skills she's lacking. That's why she feels that she's not able to complete it. So the required skills are not there. That's why she feels that she will not be able to complete it. It is not about professional behavior, it is about the competence. She is not competent enough to take up the work. It's an important task, so whatever are the skills which are needed, the uh, ability to finish the work assigned comes under professional competence and due care. So that is how we figure it out. Then the next one, Gemma, a SEMA member in practice, has been told by her boss that there are going to be some redundancies in the company. So whatever is not necessary, whatever is not needed, in terms of the staff members, whoever are not needed, they would be removed from the job. So there are going to be some redundancies in the company. She has been reassured that her job is safe, but has been told a number of but has been told of a number of colleagues whose jobs are at risk. One of these colleagues is a close friend of Gemma who she knows is about to buy a new house. If Gemma warns her friend about the redundancy plans, which ethical principle is most under threat? Is it about integrity, confidentiality, professional competence, due care, professional behavior, objectivity? So there is some official information that some of them are going to lose their jobs. So of course, her job is is safe. She would not be losing that one. One of these colleagues is a close friend of Gemma who would be losing her job. Her job is at risk. Okay, so then if Gemma warns her friend about the plan, the redundancy plan, which ethical principle is most under threat? What do you think? Narrow down, maybe whatever you think is right. Please mention that, and then let's take it up.
Confidentiality.
Confidentiality, ma'am.
Confidentiality, yes. Any another one also, someone also has mentioned something. Is it the same thing?
Yes, ma'am, same and confidentiality.
Confident, it's confidentiality because it is official information which is not supposed to be shared unless and until she's assigned with that job of informing the employees. But otherwise, just because someone is close to them or friend of them, it is not the appropriate thing. So confidentiality, it goes with confidentiality. Which three of the following benefits of a company which three of the following are benefits of a company behaving in ethical manner? Improve reputation, attract high caliber employees, increased cost, increased risk, and increased sales. So they are talking about the benefits part of it. So improve reputation, attract high caliber employees, then increased cost, increased risk are not advantages. No. So on that note, we don't select those two items. Increased cost and increased risk would not fit into the picture. So because we are talking about the advantages. And then after that, um, sales would boost up. Which three of the following would be considered to be connected stakeholders? Employees, government, environmental pressure groups, suppliers, customers, lenders. Employees are internal, government is external, environmental pressure groups are also external. They are not connected to the business. Okay, but suppliers are connected for the supply of material. Customers are connected to the business because they they purchase the goods from the business. Lenders also lend the amount to the business. So which three of them are connected stakeholders? Suppliers, customers, and lenders. Ninth one, the directors of ECC Limited are proposing the introduction of mini corporate social responsibility initiatives. However, their shareholders are not convinced that it is worth the increased cost to the business. Which three of the following are arguments for the introduction of CSR initiatives? So, we didn't do much about CSR, only the concept I have explained. But when they take up a responsibility for the society and then take it up, um, there are certain advantages. That is, the sales would increase. That increases their reputation. Their business reputation would be enhanced because the organization, if it is catering to the requirements of the society or serving the society at large, so we see that. The company's reputation increases, the customers also they get attracted to buy the product. See, it says that some of the advertisements you also must have seen. See, out of the total price collected, a part of it goes for the child welfare or child education, or maybe for certain purpose, very specific purposes they mention. They also include that as a part of their advertisement promotion. They say that a part of the profits are spent towards something, some cause, some purpose. So we see that the that would result in increase in the sales. Sales also increase. So here we are asked to talk about three of the following are arguments for, it's not against, for the introduction of CSR initiatives. Okay, so what three things do you think?
Option A, D, and E.
Okay, option A strengthens the band. Yes. B acts as a method of differentiation.
Not B, ma'am. D, attracts new
Attracts new
customers.
customers. Yes, attracts new
It's a
customers.
public relation exercise.
Exercise. Okay. Increase cost. Okay. 10th one. The risk that the directors may run the company in their own interest rather than those of the shareholders is known as the agency problem. Is this statement true or false? which it's true. The agency problem talks about the relationship. Yesterday we've discussed the relationship which exists between them is about the principal and the agent. So agent should work on behalf of the shareholders. If they do not work on behalf of the shareholders, they have their personal motives behind managing the affairs of the business. We call that to be as agency problem. Which three of the following symptoms can indicate that there is poor corporate governance? Increasing contact with shareholders, domination of the board, lack of internal audit, emphasis on long-term profitability, lack of supervision of employees. So, what could be the problems?
Lack of internal audit, lack of supervision of employees,
That's right. Lack of supervision of employees. The
uh,
increasing contact with shareholders is a positive thing. See, it is not poor corporate governance. So they have to work on behalf of the shareholders. So if they are in touch with the shareholders, that is not an issue. The board may be very dominating. So they are the ones who are managing that, and then they, if they are dominating the affairs, then they are looking at their benefit or their way of managing the business rather than the benefit of the shareholder. So that is another point. Emphasis is on long-term profitability is a good indication. So it is not that only the short run they would be working. Um, See, emphasis on short run is a symptom of poor corporate governance, because see, generally managers are entitled to receive some incentive on account of the profitability. So if they are more focused on earning profit in the current period, so their intention, the way they are behaving is not appropriate, because their motive is towards getting those incentives. Um, See, the short term profitability steps like increasing the selling price or not bothering about the customer feedback, they're just uh, running the business according to their wish, just to ensure that the current period there is profit. So increasing the selling price immediately in the current period, yes, profits would be high, but that will have an impact on the long run. Long run, the demand will fall. So that is a serious issue there. Therefore, here what we have to understand is, are they looking at short term profitability or long term profitability? Long term profitability, they are not in a hurry to earn profit and then maximize profit in the short run. So their intention to earn incentives is not the criteria here. Long run survival, sustenance in the sustaining in the market, and then making profit in the long run should be the aim. But if that is not the case, that is a poor corporate governance. So we see B, C, and E are the appropriate answers. Of course, we did not discuss anything about UK corporate governance code and US corporate governance. In the UK, corporate governance is principle based. See here, these concepts are actually explained in E3. At that time, you would be looking into uh, principle based and rule based. UK follows. One second, I just chose the wrong marker. UK chooses the UK corporate governance code. So there is a set of instructions, set of things which are followed. So that's called as principle based. US corporate governance follows SOX, Sarbanes-Oxley Act, and that is called as rule based. So both of them are correct. So on that note, we see that both of them are true. 13th question. The finance function has three main roles. It enables, shapes how, and narrates how value is created and preserved. Which of the following would be the would the finance function carry out to shape how the organization creates and preserves value? Let me just put you to the PPT once. So now the questions would be based on the finance function. So have a look at this and then we can answer.
Option A, ma'am.
That's right. Option A, performance management and control. Planning and this is enable how. Reporting is narrate how. Planning, forecasting, and resource allocation is also enables how. So shape how is performance management and control. 14th one, using the principles of good corporate governance, which three committees should be. Committees part we have not done, so let's not take it up now. If time permits and if there is a need that we need to do that, we'll take it up. But otherwise, I think 15th, 16th, 17th also we will not be touching right now. Starting from 19th, we'll take it up. What are the three classifications of stakeholders commonly known as? What are the types of stakeholders? Internal, external, and connected. 20th one. Maybe tomorrow we should say that class is from 2:30, then 3 I think we can start. People are joining now. Match the stakeholder with their need, expectation of the company. We have stakeholders given as government, shareholders, employees, customers, need or expectation. We just have to match them. Pay, working conditions and job security, dividends and capital growth, provision of taxes and jobs and compliance with legislation, value for money, products and services.
Government is provision of taxes and jobs and compliance with the legislation.
Okay. Then
Shareholder is dividends and capital growth.
that's right.
Employees pay, working condition and job security.
Customers, they look for value for money, product and services. Which of the following statement is or are true? The chairman is the person in charge of running the company. The chief economic officer is the person in charge of running the board. There is no concept of chief economic officer, chief executive officer, CEO. Okay. Which of the following statement is or are true? Second one is not at all right. So we now have to think about whether first one is correct or not. The chairman is the person in charge of running the company. Is that correct or not is what has to be looked into. It's not the chairman, but it is the CEO. CEO is Chief Executive Officer. It is not Economic Officer. So first one is wrong. Second one, the concept itself is wrong. So there is no concept of Chief Economic Officer. So both of them are wrong. So both of them are wrong. So neither of them. Complete the following sentences by placing one of the following options in the spaces. The preparation of forecast, for example, of future sales or material prices will be an important role of the finance function. Which finance function? See, the options are given. Then
The first one is enabling.
first one is
Yeah.
enabling. Okay. Then forecasting is enabling.
Second,
Yeah. Second one. Yes, ma. Please.
second one is shaping how, ma'am.
No. Narrating, reporting, no.
Narrating, ma'am. Sorry.
Yeah, narrating how. So let me just put you to the slide once. Enabling talks about planning, forecasting, resource allocation. Shaping how talks about performance management and control. Reporting goes with narrating how. Okay, if we have the alphabets given as A, B, and then C. So the first one, forecasting, will be about enabling. This will be B. This will be A, narrating. And then control, performance management and control is shaping how. This is C. Which of the following organizations is normally found in the public sector? Schools, charities, clubs, and businesses. Public sector, no? Schools. Schools would be. Which of the following statements is or are true? The finance function will help shape how an organization creates and preserves value through financial corporate reporting. The finance function merely records what has happened over the period in question, and as long as it can do that, it shouldn't need to be proactive in the way that it is organized. Statement one or two, or both of them, or neither of them. Which one of them is correct?
The first statement is correct.
Shape how an organization creates and preserves. Shape how. This is narrate how. No, reporting will be narrate how. This is shape. Do you see this one? And this is reporting. So they don't match. Okay, one is not correct. Second one, if it is reporting, it should be narrate how. If it is shaping, it should be control, performance measurement and control. So on that note, one is not correct. Two, the finance function merely records what has happened over the period in question. And it says that it should not be proactive. No, that is not the case. So the reporting part of it talks about there is a concept of integrated reporting which says all that which is not included in the financial statements, because we see that there is one aspect of financial statements, only those that can be measured in terms of money are recorded in the financial statements. So if only those things are reported, that would not be sufficient. It will not be helpful to many stakeholders. So because the stakeholders are looking at or seeking some information for the decision making. For example, if lenders or banks are looking at whether or not to extend the um, additional loans or additional finances. So if they want to understand that, maybe they should have a thorough report of about what is their payment pattern, how promptly did they make the payment, etc. 1 second. Sorry about it. Then second one, what so the financial statements do not uh, depict everything whatever happens in the organization. So now report should be prepared in such a way that, see, it is not asked of them to present any other additional information, but there are certain informations which have to be disclosed or reported apart from the financial statements for the benefit of the stakeholders. So I was talking about an example. If the banks are looking at whether they are prompt on making their payments, or do they pay them regularly, what commitments do they have in terms of payment, what is their working capital position, do they have sufficient cash amount, all that, if that is provided to them, then they can take a decision about whether or not to extend additional loan. Customers may be looking at what is the cost control measures which they have adopted. So did they put in effort to cut down on the cost, is what the customers would want to understand. Otherwise, if a higher price is included for the products, they feel that the right pricing system is not adopted or they are exploited. So certain information or which is necessary to be disclosed for the benefit of stakeholders. It is not asked of them. It is only that what is mandatory is only the financial statements and report on financial statements. But additional other information also is included in the reporting. That is the concept called as integrated reporting. Various aspects of the organization about which the reports have to be prepared. Who are their employees, what is the investment in their assets, equipment, machinery, infrastructure, then what intellectual assets do they have, the patents, copyrights, etc. So all these things, when the reports are prepared and disclosed or presented for reporting, many stakeholders would get benefited out of that. So it is not that they have it would be wrong if it says that they need not be proactive. They, in fact, they have to be proactive. They have to decide or they have to take decisions in such a way that, or they have to prepare the reports in such a way that everything is disclosed. So that is, so on that note, second is also wrong. Okay, so both of them are wrong, so neither of them is the answer. 25th one says that, which of the following is an example of poor corporate social responsibility? The sacking of an employee for gross misconduct, building a product with a known failure rate, the advertising of cigarettes on early evening TV, a significant redundancy program. Poor corporate social responsibility. Corporate social responsibility. First one, sacking of an employee is right because of misconduct, gross misconduct. So sacking of an employee is justifiable. So there's nothing to do with that one. Then comes the second one. They're building a product with a known failure rate. So if they still build that, um, initially they may convince the customers to buy the product, but then it will not survive, and they will have to bear the losses. The organization will have to bear the losses. Third one is the advertising of cigarettes on early evening TV. Early evening TV, wherein the entire family would be the viewers of those programs. And advertisement of cigarettes on early evening TV is about not being responsible towards the society. So that will be advertising of cigarettes on early evening TV. A significant redundancy program, it has to be taken up because of cutting down on the cost, or whatever is not needed, whatever is unnecessary, that can be cut down. So that is not about corporate social responsibility, but it would be about cost control measures in an organization. What is the generally accepted definition of agency risk? Agency problem is the way in which the relationship between the shareholders and the management, the board of directors, is present in the organization. If the top management is looking at their personal benefit, they are looking at getting some benefit for themselves, then in that case they would not act in the benefit or for the benefit of the shareholders. So that is the situation about agency problem. So, what is the generally accepted definition of agency risk? So, from among them, let's select the right one. The risk that agency staff are less experienced than full-time employees and hence are more likely to make mistakes. So, it's not about the staff and then full-time employees. The risk that the government agencies will interfere with the company's procedures, resulting in excessive cost. See, directors as agents of the owners will act in a way that is contrary to the wishes of their owners. Last one, employees as agents to the directors will act in a way that is contrary. So, which one of them is correct? In the four options, see, first two will not fit into the case. C talks about directors are agents of the owners. Then D talks about employees as agents to the directors. Who's the right agent of the agent, and who's the principal? Directors are the agents of the owners. Owners are the shareholders. So on that note, C will fit in here. It is not that employees are agents. So that would be a wrong thing. C is the right answer. 27th one. Changes brought about by technology are greatly changing the shape of finance function. However, not-for-profit organizations will not be affected affected as their primary objective is not profit motive. Can we conclude that there is no requirement for them to adopt the technology? Would that be an appropriate one? Of course, they are not working with an intention to maximize profit. That is there, but to cater to the requirements of whatever is their objective, to fulfill that objective, they also would be requiring the technology. So technology is adapted by those organizations which are seeking to maximize profit, and those that are not seeking to maximize profit. See, at the end of the time, they have to serve their objective in the best possible manner. When they have to serve their purpose or achieve their purpose in the best possible way, every aspect of it has to be considered. So technology also, if they have to adopt it, they have to adopt it. It is not that they are not incurring costs, they are incurring costs, but it is only that they are not looking at maximizing profit, they are not looking at making profit. But yes, they are also looking at achieving a benefit. Benefit is by serving others. So in the process of serving others, if there is a requirement that they adopt technology, they should come forward to adopt technology. So uh, false is the answer. Which of the two statements are true with regards to change in the modern world? See, change always increases the risk faced by an organization. Change is so unpredictable that there is no point in having long term plans. A key driver of change in the modern world is the rapid advancements in technology. Changing customers' expectations cannot be ignored. If a business wants to remain competitive, change does not affect really small enterprises. Two statements are true. So which two of them are true? Can we say change increases the risk faced by an organization? Yes, but not always. No, so sometimes change can also bring about certain benefits. See, by change, by adopting technology, by change in the way they operate, that maybe they can move towards or go towards better efficiency. So that is a possibility. It is not always that the risk increases. Then change is so unpredictable that there is no point in having long term plan. Just because future is not uncertain, it doesn't stop, it should not stop them from planning for the organization. So all types of plans, short term, long term, medium term, all types of plans should be taken up. So it should not stop them from planning for long term periods. C talks about key driver of changes in the modern world is the rapid advancement in technology. Yes, that's the key driver. Because of rapid advancements in technology, change happens. It's not just adopting that, it is updating from time to time also. Then D talks about changing customers' expectations cannot be ignored if a business wants to remain competitive. So they also have to cater to the requirements of the customers. So we understand C and D are appropriate. Change does not affect really small enterprises. It does affect small businesses also. So on that note, we conclude that C and D are the appropriate answers. Then 29 says that Jemima has been asked to collect some information for her manager. It takes her 14 hours to gather the information, and when she presents it to her manager, it is immediately filed away. Which of the characteristics of good quality information is not being exhibited? So we remember that the characteristics of good information, the characteristics which present the information to be as good. It is given in the acronym called as accurate, complete cost benefit analysis, understandable, relevant, adaptable, accessible, timely, easy to use. So um, see, on that note, what happened here is Jemima has been asked to collect some information for her manager. So it takes 14 hours. She's collected the information, but no sooner she has presented that, it is immediately filed away. Which of the characteristics of good information is not being exhibited? Is it understandable? Is it complete? Is it cost benefit analysis, or is it accurate? It's nothing to do about the way it is presented, that we can talk about understandable. It is not even indicated that that was partially collected, it was incomplete. That is also not the scenario. So complete, accurate, that is also not there. So she spent so much of a time, so that time and cost, because she has to put in some effort, the cost which is spent on acquiring this information, she took 14 hours to gather the information, and when she presents it to her manager, it is immediately filed away. So what's the benefit? Is there any benefit which is derived out of that? It doesn't seem to be. Okay. So on that note, the cost is spent, but there is no benefit which is realized. So which is not exhibited is cost benefit analysis. Which of the following is not one of the 5 A's of finance professionals' basic activities? Let's look at that once. Yesterday we've learned about the framework. So the framework has 5 A's. The 5 A's are assemble, analysis, advise, apply, acumen. These are the 5 A's. Then we have 4 I's: information, insight, influence, and impact. So on that note, let's answer this question. So out of these 5 A's, it says that which one of the following is not one of the 5 A's of the finance professional's basic activities? Assemble, apply, acumen, advise, align.
Option E, ma'am.
E, that's right. Which of the 5 A's of a finance professional's basic activities includes collecting data from a variety of sources? Collection, which one would be correct? Very simple. Is it acumen, advise, assemble, adapt, accumulate?
Assemble.
Assemble, that's right. Adapt and accumulate are not a part of this framework. 32 says that data consists of raw facts and figures, while information is data that has been processed. Is it true or false?
True, ma'am.
Which of the 5 A's of a finance professional's basic activities includes comparing actual information to budgeted information? Comparison, comparing actual information to budgeted information. First, information is collected, after that, it is analyzed. Then, advice to have an influence. So, with that, there is an impact, and then that acumen follows. So, which stage are we talking about? Comparison of the actual with the budgeted figures.
Analyze.
That's right, analyze. Thirty-four. Which three of the following may be limitations of using external data sources? It may be out of date. It may be more difficult to gather. It has no relevance to the organization using it. It may not be accurate. It is unethical to use someone else's data. May be limitations of using external data sources. See, external, someone has already collected the data and that data has to be used. So what are the limitations? So um, first one says that it may be out of date. It may be out of date because they are not collecting it right now. Someone in the past has collected. It may be suitable for them, appropriate to consider such type of data, or it may be for a very old date, backdated, out of date. That is a possibility. Let's look at the other things also, and that is a possibility that it may be out of date. Okay, we will also look into the other things. It may be more difficult to gather. External entities, when they collect the data, it is not always that it is free of cost. Sometimes some information, if it has to be acquired, there is a cost which has to be paid. Let's say for a company's performance reports, some company, if someone has taken up the analysis of a particular company's financial position, so such report is not free of cost available. Some published data which is there cannot they cannot get an access to that unless and until they spend some amount. So um, some permissions. So if there are they are government. They are published on government websites, or they are available with the government sources only. In such case, then when we it may not be available for everyone. So then also there is a difficulty in that. It has no relevance to the organization using it. It may be relevant, it may not be relevant. It may not be accurate. It is unethical to use someone else's data. Unethical aspect of it, we don't have to think about it, because see, data is both both primary and secondary. Secondary, external, someone else has done that. It is only to use it or not to use. Sometimes it is free of cost, sometimes it is costly. So nothing about ethical aspect of it. So on that note, E is ruled out. E doesn't fit into this one. 3 has to be selected. Okay, if 3 has to be selected, which three would be most suitable? Out of that, first we can go with that, second also we can go with that. Now between C and D, E anyway is not the answer, so it has no relevance to the organization using it. It may not be accurate. So may not be accurate is one thing, because they are not personally involved in collection of data. So what ways they have used to collect the data is not known. So on that note, it may not be correct or accurate. Okay, that is a possibility. It has no relevance to the organization using it. No relevance may not be the situation. It may be relevant to that organization. We do not know. But between the two, it would be a limitation if it is not accurate. So that way we go with D. Which type of information cannot normally be expressed in numerical terms? Is it quantitative, qualitative, financial, non-financial? Quantitative, financial, both of them are in numerical terms. Then about qualitative and non-financial. Non-financial, we see that non-financial is both numerical and non-numerical. So non-financial also is in numerical. So it is both of them. Uh, Non-financial, this will be quantitative or qualitative. So quantitative, the very fact that it is mentioned as quantitative, it is in numerical form. Fine. So if that's the case, which one is the correct? Qualitative is non-numerical. It is generally in the form of opinions or interviews or something like that. So that is non-numerical in nature. 37, which three of the following are examples of internal sources of data? From the internal sources, purchase ledger, payroll data, newspaper is external, exchange rate data is external, production is internal. Very simple. At what stage within the information to impact framework is the finance function most predominantly focused on guidance and management? So let's look at that particular thing. See, at what stage within the information to impact framework is the finance function most predominantly? It talks about guidance and management. Where is that? um, the role of guidance and management is the most. See, this is the basic framework. The basic framework, later on, the acumen part of it is now taken over by accounting and governance. Initial stages, it is more to do with the accounting and governance. At the later stage, as it moves forward in the framework, then we see that the role of accounting governance keeps reducing and the role of guidance and management keeps increasing. The most is what is asked. So, where is the guidance and management? The most. So which of these things? We see that predominantly focused, the most predominantly focused on guidance and management. So what do you think is the answer? 37. David is examining a report that has been prepared by a junior member of the finance team. He has noticed there are a lot of spelling mistakes and not all of the figures add up. Which of the characteristics of good information is not being exhibited? Accurate, complete, understandable, relevant. Please respond. Anyone there in the class? Respond. Elijah is currently in the process of comparing budgeted sales to actual data and trying to investigate reasons for the variances. Using the information to impact framework, which stage would best describe Elijah's current activity? So, see, in the form of A's, we've done a similar question. Comparison of actual with the budgeted is about analysis. Here, so in the form of ice, which one would we consider? Is it information, insight, influence, or impact? What happened? Nobody's responding.
Impact, ma'am.
Impact is the last stage. The information is collected, it is analyzed. Analyzed is about understanding whether they are implementing it appropriately. Based on the analysis, some insights are drawn. Using this, they advise to create an influence so that it is applied and impact. The final result is the impact is understood. That is deploying of solutions. So comparison, whether they are going in the right direction or not, that analysis or insight, questioning attitude. So on that note, it's not information, it is not impact. Insight and influence. So between the two, it is insight. Which of the following statements regarding the analysis of quantitative data is correct? Sales growth of 20% year on year represents significant growth. Non-financial data cannot be quantified and therefore has less analysis value than financial data. Good quality analysis relies upon a representative sample of the population. Number of training days taken per employee is not an example of quantitative data. So what's the quantitative data? The one which is in numbers, numerical form.
Option A and C, ma'am.
Only one has to be selected because otherwise it would have been very clearly mentioned about two, which three. So nothing is mentioned. It is only one has to be selected. Which of the following statements regarding the analysis of quantitative data is correct? Sales growth of 20% year on year represents significant growth. Okay, then you said C, good quality analysis relies upon a representative sample of the population. So both of them, whether they are correct or not. B is non-financial data cannot be quantified and therefore has less value than financial data. Number of training days taken per employee is not an example of, it is an example of quantitative data. So B and D do not qualify. Between A and C, how do we understand whether sales growth of 20% year on year represents significant growth? In itself, 20% looks good, but unless and until it is used with the suitable comparator, it is not, it cannot be concluded that it is good or bad. See, the industry wise, industry may be having a higher growth rate or better than 20, 25%, 30%, better than 20 is also a possibility because initial levels of the industry growth rate would be quite high because that's a new thing which has come up. We do not know unless and until it is compared with a suitable comparator, conclusions cannot be drawn. So on that note, A does not qualify. So C is the right one. So when sample is drawn out of the population and the analysis of the sample is taken up, applied to the population, in that case, the representative sample, whether it is a true representation of the entire population is, or not, is what decides whether the results can be applied to the population. So good quality analysis relies upon representative sample of the population. A also you have done it correctly, but remember that in itself no figure is can be analyzed. It has to be compared with some other figure. 41 says, during which stage of the information to impact framework are solutions typically deployed?
Influence.
Solutions deployed. Now tell me.
Impact, ma'am.
Impact. That's right. That's why I kept this slide. See, influence is developing solutions. Deployment of solution is impact. Performance measures can be both qualitative and quantitative. Which three of the following would be classified as quantitative performance measures? Quantitative, which are in the numerical values, figures. Customer satisfaction rating, sales, level of innovation, staff productivity, profits, units produced. We need to select three. Obviously, sales would be there. Profit also would be there.
Profit and units produced.
Then it says which of the following roles performed by the accounting function at LPW company would be best described as impact in the information to impact framework? Impact is the deployment of solutions. Setting market prices to improve market share. Compiling reports on current pricing structures. Forecasting likely sales figures based on market conditions. Monitoring compliance with industry regulations. It's the situation which is given. Let's try to understand this particular situation. This is the framework. First, they collect information. That information is analyzed. In analyzed information, insights are drawn. They are given. They are used to advise someone to develop solutions. That is influence, so that these solutions can be deployed or used, so that there is an impact which is seen. Now, this is the framework. A particular situation is provided to us. So what's that situation? It says that setting market prices to improve market share, compiling reports on current pricing structures, forecasting likely sales figures based on market conditions, monitoring compliance with industry regulations. So there are set of things which are given. We are asked to talk about which one is an impact part, from information to impact. See, compiling reports on current pricing structures is about the the analysis which is taken up. Forecasting likely sales figures based on market condition also is about collection of data and analysis until that it is taken up. Monitoring compliance with industry regulations is also part of looking into analysis part. Then after they take up the forecasting, planning, etc., everything which is done, then a solution is developed. That is, what should they be taking up, the future course of action, what would be the appropriate course of action is what is decided. Finally, they set the market prices to improve market share. The ultimate aim will be to increase their market share, sell more number of units. On that note, impact, where would it be seen? Impact would be at the time when they decide on the market prices to release their product. Before that, they collect about, gather the information, analyze the information, understand whether they are taking up the steps in the right direction. Finally, the product is sold in the market. At the time of selling that, the right decision whether they have taken or not, deploying the solutions is at the impact level. So on that note, we see that setting market prices to improve market share would be the appropriate one. We'll take the next question and then go back to PPT. 44th one says that VJ, the management accountant at GDH company, has been reviewing the outcome of the current product development strategy. VJ's aim is to understand how the decision-making process at GDH, including its use of key data, could be improved in future. Which of the following finance activities does this represent? Is it acumen, assembling information, advising to influence, analyzing for insights, profit, units produced? VJ's aim is to understand how decision-making process at GDH, including its use of key data, could be improved in the future. So that's the key point there. The basic framework, now they collect information, analyze that, then that is used to advise and have an impact, apply the solutions and then have an impact. In future, how they would take the decision is the acumen part of it. This is acumen. First, collection of data, analyzing the data, advising so that there is an influence, and then apply these results and see an impact. This is at the present, but then in future, to follow the same framework, we call that to be as acumen. So on that note, it would be acumen. Done. We've done discussed quite many questions, around about 30 questions at least we have discussed. In between, we've left few of them. So we'll go back to the PPT and take it up, the topic further. The next topic is the structure and shape of the finance function. So here, what are we going to learn about this one? See, what is an organizational structure? First, we understand the meaning of it. The contemporary transformation of the finance function, how it has changed, what happened to the shape of the finance function, at this point of time, you have to focus on that. What is this all about? What is the shape of the finance function? What is this concept of shared services and outsourcing of finance function? So finance operations. So that is what we will be looking into. What is an organization structure? The first very basic point. What is an organization structure is what we will be looking into. What is an organization structure? It says that it is organization structure is formed. It is formed by grouping of people into departments or sections and allocation of responsibility and authority. So that is an organization structure. See, organizations differ in sizes. Some of them are simple, small organizations, not much complex activities carried on. So it is easy to manage the organization as a whole. So the top management takes decisions for them, and it is easy to implement that and then follow whatever has to be done. But if the size of the organization is big, managing that by the top management may become a difficult task. So, for the ease of taking up the work, the organization is formed into various groups. So, each group would be termed as a department or a division or a unit or strategic business unit. Why do we call it a strategic business unit, SBU? Is that these departments are given the authority to take decisions for themselves. So they take decisions, and also they would be held responsible for the decisions which are taken. Decisions in the sense they have that authority assigned to them to decide what would be the course of action. So they are involved in planning, implementing for their department or division. So there is a manager appointed. The manager is given the authority to take decisions based on the decisions which are taken, and implementation. Later on, they are also evaluated and held responsible for the decisions. So on that note, because it involves the decision making part of it, it involves the implementation part of it. So we also call that to be as a strategic at the decision making level, strategic business unit. So when people in the organization are grouped into departments or divisions or sections or units, wherein the responsibility and authority is also allocated, we call such uh, groups as organizational structure. So when they are divided into that groups, and then that would be called as an organizational structure. Mintzberg suggested that uh, the organization can be split into 6 building blocks. Otherwise, in general, basic form of an organization structure is in the form of a pyramid. It is a pyramid shape. That is, we see that at the bottom, that is broad. It is broad at the bottom, but as it goes up, it becomes narrow. So there is a pinnacle point. There is only one person here at the pinnacle. That is the CEO. But when it comes down, we see that it keeps increasing in size, and it becomes quite broad at the bottom, wherein many people are there to work. So that would be the operational level, implementation level. People are just taking up the task which is assigned to them. But at the top, we see that the top part of it is the strategic level, which we also call it as top management. Then we see there is a middle level management, and finally we see that there is a uh, the low level management or the operational level management. Okay, so this part of it, this is the basic structure of an organization. So this Mintzberg has explained in his own way. Then this pyramid shape, he has understood that there are 6 different aspects of this organization structure, which he named them to be as 6 building blocks. At the top, it is the ideology. Ideology, when an organization is set up, there is a mission behind that. Mission talks about the very basic purpose why the organization is set up. So the ideology behind the organization being set up. So that is at the top. That is the very basic purpose, the reason why the organization is set up. After that, based on the ideology, the top management takes decisions. So the top management, we call that level to be as the strategic level. Strategic level, what do? They take decisions for the organization as a whole. All the decisions are taken for the organization as a whole, not depending on one individual department or division or one particular activity or function, nothing like that. So the decisions what are taken at the strategic level involves the entire organization. Like the decisions would be in terms of what products or services will the organization produce, then where would the products or services sold, whether it is in the domestic market, international market, where would they be selling that. So that talks about what the organization as a whole would be doing that. So that's at the strategic level or the strategic apex. That's the second building block. Then when it comes down, we see that the middle level is there at the middle. So the middle level, see, once what products or services or where would it be selling, that is decided. That is only the decision about what they would be doing it. But then how they would be doing it also has to be decided. Let's say that the strategic apex has decided about producing 3 products. So mere deciding on that is not sufficient. How would they produce? Resource allocation has to be taken up. How would they produce? What activity should be taken up so that these 3 products would be produced, or whatever is the decision, or where would it be sold? Which market will they are they planning to enter into, capture that? So those decisions, how to achieve those things, the ones which are decided by the strategic apex. The middle level, we also call that to be as management level or the tactical level. We call these are the terms. So they have to plan for how they would be implementing whatever is planned by the strategic level. So the middle line is supported by the techno structure, the technology, the infrastructure, whatever is needed, other support activities. So see, the production activity has to be taken up, but then there are certain other services which have to be provided. So support staff is also supported by that. Then finally, we see that the implementation level, that's the operating core, that is at the bottom. They are involved in implementing whatever is the plan. Minsberg further went on to explain about these. So he talks about what is the coordination mechanism, and then later on he goes on explaining about what are these 6 building blocks and what is the coordination mechanism. So he talks about what is the coordinating mechanism in the organization. It says that coordinating mechanism integrate the building blocks into a cohesive unit. So the first one talks about mutual adjustment, then direct supervision, standardization of work processes, standardization of outputs, then standardization of skills and knowledge, standardization of norms. So these are the coordinating mechanisms. Now, how do I mean, what does these things mean? How did he explain this part of it? They are divided into different departments or units or groups. So they are divided into certain groups, the organizational structure. So when they are divided into departments, each department works for the, I mean, they take decisions and they work towards implementation of those decisions. So that is what is the basic purpose. That is the decentralization is the objective behind that. So that is what we understand that. So what happens in an organization when they are divided into groups? They see later on they are also evaluated based on their performance. For that reason, they there is a, competitive spirit which um, enters into the organization, and then in pursuit of being evaluated as the best, they act in a competitive spirit. Sometimes they do not consider the benefit of the other units. They are more focused on achievement of their department unit, but they are not working in isolation. Yes, they are divided in groups or departments or divisions, but all of them are a part of the main organization. That one organization, they are all subunits. So then the first coordinating mechanism talks about there should be a mutual adjustment among the departments. For ease of working, they are divided into departments with a manager, and the manager being given the authority to take decisions. So based on that, decisions are taken, and then that's all fine. Okay, but they also have to understand that they are not working in isolation. There should be coordination. Each other department should encourage the others and work in coordination, which may not be officially mentioned, but it is an informal way of coordinating among themselves. Sorry about it. So the first one talks about mutual adjustment. So um, they are part of the organization is what has to be understood, and there must be some kind of a coordination, informal coordination. The second one is there should be a formal coordination also when there is direct supervision, how they are performing. So there should be a direct supervision also prevalent in the organization. So coordination through a formal hierarchy. Then standardization of work processes and specified operating procedures. So how they would be operating, what is the output which would be produced, and what are the skill sets which are needed, the rules and regulation, the norms and procedures, all of them have to be standardized. So that is what is mentioned as coordinating mechanism in by Mintzberg. He has when the organization structure is explained by him. So he looks at the organizational structure in 6 different building blocks. Then he also talks about what is the coordinating mechanism. Then he goes on explaining that the type of structural configuration. So when the organizations are divided, made into organization structures, then he categorized them into 5 different structural configurations. So that is, one is simple structure, machine bureaucracy, professional bureaucracy, divisionalized, ad hocracy, and innovative. So he talks about there are 5 different types of structural organizations. Then he connects the building blocks. There are 6 building blocks. Then he talks about what are the key coordinating mechanisms. Then with each type of organization structure, so he identifies them to be as something which is simple in structure, or machine bureaucracy where there are many levels in the hierarchy, machine bureaucracy, then professional bureaucracy, those that are involved in rendering services with specialized skills, then divisionalized, that is divided into many subunits or divisions, so that is divisionalized, adhocracy, or innovative. So innovative businesses, which have emerged over a period of time, so evolved over a period of time. So what are the building blocks which he is connecting here? If it is a simple structure where there's not much complicated work carried on, so it is a simple structure. Then this simple structure where the top management is sufficient enough to manage the affairs, not much complicated work is going on. So what do we see? That is, the top management can take decisions and they can be effectively implemented. That is a simple structure, strategic apex, that is sufficient. The decision making for the entire organization is sufficient. Instead of planning at multiple levels and various people being involved in the planning, the top management can decide about what should be done in the organization. So it's just the planning at the top level, and the coordinating mechanism which is required is direct supervision. Simple structure, not many are there, not sometimes we do not see many people also there, not much complicated activities, complex activities are also carried on. In that case, they can plan, the top management plans, and when it is implemented, they themselves can supervise that. So direct supervision is sufficient. If it is machine bureaucracy is various levels, so it has to pass through various levels in the organization. So we see that different hierarchical structures also, sometimes we see that there are many levels in the hierarchy. So the operating level, then they have to approach their divisional managers, then general managers, then general managers approaching the others like CFOs, CEOs. That has to be done. There may be many things. Then otherwise we just see that the of people who are involved in implementation, the managers and the top managers, that's it. So it could be as simple as that also. So when there is a machine bureaucracy, when there are many structures, many levels in the organization structure, it is heavily unionized organization. So they have to depend on the techno structure where the facilities or the infrastructure, that is all possible, and the work has to be standardized, standardization of work, what work has to be done and who should be taking it up, standardization of work is required. If it is professional bureaucracy, those that are involved in providing specialized services like hospitals. Then we see Kaplan. One second, someone's Professional bureaucracy. The key building block is how do they implement that. For that, what is the key coordinating mechanism required is, it's a skill. The standardization of skills is what is needed. Kaplan is the material providers for these professional programs like SEMA, ACC and all. They are the material providers. So they design that, they prepare the content and then provide. So specialized skills is what is needed. Then divisionalized organization split into business units for each product sold. So that's at the middle level, wherein they plan about what would each department or each division unit take up. So what is that which has to be produced is standardization of output. Adhocracy innovative, it is both the operating core and the support staff, and then they work with mutual adjustment. So this is the framework which is given by Mintzberg about the organizational structure. Then we see that there are different types of or the different types of structures. See, depending on the size, if the size is small and if it is large, so as it moves from small size to large size organization, we have different types of structures. If it is small in size, we can call them as an entrepreneurial, because it is started by an individual, okay, um, managed by the owner, or maybe a manager or manager. So small in size, easy to manage, managed by, most of the times managed by the owner, or sometimes with the help of a manager also. Then as the size keeps increasing, we see that it's called as functional, where groups together employees that undertake similar tasks. So we see that slowly it becomes functional, where it is divided into groups and then departments, and then slowly each group carrying on with a specialized activity, specific activity. So the size has increased, so it becomes necessary for them to group them, and then the work is carried on. So as the size moves from small to it becomes little bigger, then it's called as functional. um, Bigger than that, then it is divided into various departments and divisions, so it's called as divisional structure. Splits organization into several divisions, either product based or geographically based, region wise or anything. Then if it goes further, and then it forms into a matrix, that is, they may have more number of products in the product line, and also they may be catering to that, or they may be selling all these things in multiple uh, locations or regions. So then that would become a matrix form, like let's say that their presence is there in north, then we see south, then we see east, west, something like that. And if they are producing, let's say that they're producing product 1, P1, P2, P3, something like that, if for example if we take. So when they are present in multiple locations with multiple products, so a matrix form is I mean, it can be formed into a matrix. The structure becomes a matrix form, wherein P1, whether it is being sold in north, south, maybe they are not there in east or something. Okay, a structure, a matrix format is framed, and then we see how they are performing in each region or each. So this is an example like that. Multiple aspects are included into that, and then the structure looks a little complex. So that is called as it's a combination of a functional and divisional structure. It's called as a matrix type of organization structure. Then what's centralization and decentralization? Centralized structure talks about the top management takes the decisions for the entire organization that is implemented, and then they themselves, like we have looked into, they can only manage that, supervise the activities of the organization. So the decision making power lies with the top management. Such a structure is called a centralized structure. But if the size is large, it is big in size, and if it cannot be effectively managed, then it has to be grouped into divisions or departments. In that case, the authority is passed on to the other levels. So each department or division, we see that managers are appointed and they are given the authority to take decisions. So the decision making from the centralized level is moving on to the other level. So decision making power is decentralized. So that is passed on, the authority is passed on to the other levels. They start taking decisions, and when the decisions are implemented, then of course they are also held responsible. It is not just that the authority is given, but yes, they are also made responsible for the decisions which are taken. So such a structure is called as decentralized. Decentralized structure, the authority to make decisions is passed down to units and people at lower levels. Then there is the shape of the organization is in I mean, it's presented here as where um, we see that this is a taller structure. This is tall, and this one is flat. Tall, which we wherein we see that there are many levels of hierarchy. See, as it moves from the bottom to the top, we see that they have to cross multiple levels of hierarchy until they reach the top point. But here, we in a flat shape, we see that many people are there at the bottom, and also not many levels are there in the structure. So very few levels are few managerial levels are there until they reach the top point, that is the top level. So that the span of control is narrow. So see, the level of manager here at this level will be only focused on managing these many people. On top of them, then this person will be managing only these two. The span of control is narrow, but because here the levels are less, so each level would be managing a greater portion of the employees or the tasks. So the span of control is wide when there are very few managerial or hierarchical levels within the managerial levels in the hierarchy of the organization. Okay. So yesterday and all we were discussing, this morning also we were discussing about the framework. So the framework, it starts from assembling of the data information, analyzing, drawing insights, advising to have an influence, apply the apply the solutions which are decided, to understand, to see what is the impact. So the acumen later on was taken over by accounting, and then we see that guidance and management. Accounting and governance, guidance and management is what. Now the paper is about managing finance in a digital world. So in an organization, now the we see that the role of digitization or the technology now is playing a major or an important role in the organization. So many functions which were once upon a time uh, taken up manually, okay, the accounting function, the finance function, now slowly we see that technology has taken over those functions. So the framework also now, the activities are the same, that is starting from assembly to the to understand what is the impact which is there. So now wherever it is accounting and governance, now that has been taken over by technology and automation. So when there was collection of data, assembling of data information, analyzing of this, that the role of this particular role was done by accounting and governance. Okay, this accounting and governance, once upon a time when it was done manually, the accounting part of it was done manually. Okay, now that is taken over by technology, which means that many tasks which were once upon a time done with the help of human beings manually, it was done. Now they are done with the help of systems. See, entering of transactions in the books of accounts is now no longer present there, because in big organization we see that all this those tasks are taken over by accounting softwares. The software then accounting packages, softwares, inbuilt softwares are there, then additional things, or they help in entering the accounting transactions in the books of accounts, and also understand what is the impact each transaction would have on the final statements. Now the regular procedure of writing the journal entries, posting them into ledger accounts, then preparing the trial balance, and then see the financial statement, that is all not now needed. If there is a transaction which is inputted into the system, what impact it would have on the financial statements also is taken care by the system itself. So manually tallying that, and then spending hours together, days together, months together, understanding that, that is no longer there. So tallying the balance sheet was a great task once upon a time. Now that can be done very quickly with the help of technology, with the help of information system, with the help of softwares which are present there too. So the information is also captured by technology. There are various ways in which technology can be captured, gathered, collected, stored in a database. Stored. We have other options also. We will be looking into that. So that part of it, capturing the data, analyzing the data, analysis also is taken up. The financial statements are prepared. From the financial statements, whatever is the analysis about various aspects of the organization is also taken care by the these this information system. The technology is has taken over that. So we see that there is more of technology and automation ruling in the organization, replacing the human beings. Then we see that guidance and management, finance function, professionals and competencies. So whatever guidance and management now is with the help of professionals. So this is the beginning of a topic we will be discussing now, that is what has happened to the organization and the structure of the organization, the tasks which are carried out in the organization. That is where you will also have to look into and focus upon that. So historically, it says that the mandate of the finance function was to focus on organizational efficiencies and to reduce operational costs. That was their focus. The focus point initially was about making it cost effective and then operational efficiency. Then what happened? This was taken over by technology. Technology now allows machines to monitor operational costs and patterns of organizational efficiency. They don't have to work out on the organizational efficiencies. Whatever are the ways in which the cost reduction patterns or cost control patterns, all that are identified by machines. The systems talk about what is the effective way of carrying out that. So when this work which was done manually, now it is taken over by technology. Now technology, the important aspect what we have to remember here is technology is much efficient than human beings because of certain features what it has. That is, human beings have certain limitations. They cannot work continuously for longer hours. There is tiredness, there's fatigue. um, their focus is not so much there. When it is a repetitive type of work, they lose interest in doing that work because of tiredness and all. There is a possibility of they making errors. So such are the things which are considered as limitations of human beings. Machines do not have those limitations, that they do not become tired. They can be used, they can be put to use 24 by 7 in certain cases. So The speed with which they work is also much higher. Then because the speed is high, the work can be done much faster, efficiency can be realized out of that. So that is a possibility. They do not get bored doing the same task, so the commands are instructed, the orders are built into that, and then immediately they continue working. There is no boredom, there is no tiredness, there's no fatigue. uh, they don't lose interest. So technology, those are the advantages what we see. So when the work is now taken over by technology, it will result in organizational efficiency. So then what happens? So the human beings are now replaced with technology. The systems are have started replacing the human beings. So what has to be done? In certain cases, we see that they are laid off. They are removed from their jobs. So they are no longer needed in the organization. So they are removed from their jobs. That's the point. So instead of removing them, they can be placed in some other work, some other task can be taken up, something else. Maybe they can expand, they can explore other opportunities. So it suggests that this should be looked into as an opportunity rather than looking at it as a threat. So the finance function should view this as an opportunity and not as a threat. Then where it looks at as an opportunity, that is diverting these resources or putting them into some other function, some other area. If they are placed and their services are taken there, it can refocus its energy on revenue and value creation, working with others and across the organization to drive business transformation and to create shareholder value. So with the efficiency which it achieves, and then also considering diverting these resources to the effective use, so they can create value for the shareholders. So that is what is the transformation what happened. So the transformation is about whatever was done historically, whatever was done manually now is taken over by technology. So that also opened doors for certain opportunities. So it should be looked into as an opportunity. And then with this change in the organization structure, it is possible to achieve greater efficiency. So that's the point what is highlighted. Um, See, the shape of the finance function, I will not explain it. I'll just give a briefing about it, and then we will continue. When do we have class? Monday. Monday we will continue again with this. So we see that initially the shape of the organization, it was in a pyramid form. That's a hierarchy. Many people are there at the bottom. Then we see as it goes up, it has narrowed down, coming to the pinnacle point where there is only one person. But then now we see that the shape of the finance function has um, changed. Now the present, the digital world, the shape of the finance function looks like a diamond shape. Do you see this one? This is a diamond shape. But in between, we also see that there is another type of an organization structure, which is a segregated form. Why did it split into two parts? Why is there segregation, splitting of that? All I will explain it in the next class. But the present one is in the form of a digital, the diamond shape, sorry, it is in the form of a diamond shape in the digital age. So that is what we are going to look into that, and focus on what happened to that one. So we will continue on Monday. Any doubts about what we have learned in today's class?
No, ma'am.
Yesterday there were many students in the class, and then not even half of them are there today. This is imposed upon you, or they are not aware that there is a class today.